following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great week and a great month. Kicking into spring, folks. To master love, you have to practice love. The art of relationship is a whole mastery, and the only way to reach mastery is with practice. To master a relationship is therefore about action, not about attaining knowledge. Market-wise, let's take a look at it out here. We have the Dow Industrials down 9, NASDAQ off 18, S&P's down 4.5, gold contract down $8.10, trading 11.9850. Silver down 35 cents, $14.08 an ounce. Copper down 7 pennies. That the baby's getting hit. Laying out at $2.57 a pound. We got light sweet crude. You talking about a price spread out here, folks? We had it all in crude out here. It's trading down 40 cents right now, $69.41 a barrel. We'll come back to that as soon as we go through the notes and bonds. 10-year note down 10 ticks, 120.02. 30-year bond off a full point, 143.29. King dollar up 302 ticks, trade 95.385. The euro is at 115.80 to 1 US dollar. The yen is trading at 111.51 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world and the world of the S&Ps. Let's go take a look at them. What do you have? You're laying right at the highs up here, folks. SPY today got down to 288.680. Bottom line, rejected it. You're at 289.960. You're going to have lighter volume. That's saying this baby wants to basically hit and go test the highs once again. The high from last week out here is 291.74. NDX 100. We take a look at the 3Qs. 3Qs set up the same way. You're down 64 cents. It's really a sideways move. Your high of last week, 187.51. We hit 186.40 today. I expect we're going to try to get into that number. We'll see how it handles it. The small caps, IWM, if we go take a look at the IWM out here, Russell 2000. Russell 2000 also has rejected lower price. Now, the difference in the Russell 2000 is the Russell 2000 can actually come in with volume as was actually pushing into the lows, because what will happen is this. The Russell 2000 will come in with volume at the end of the day. So that Russell right now is a toss-up. Gold market, we take a look at the gold market. What we have with the gold market out here, bottom line, you've done 400,000 contracts, this big contract volume. You haven't got to the bottom of its strength. The strength is 1189.50. That's where we took off, folks, on the 24th of August. We took off at 1189, finished the day out at 1213. We took out a B point, did it with volume, all of the above. Now, this was a confirmed ABC structure on the way up. It's no longer a confirmed ABC structure on the way up. The reason being is that it didn't get to its C point yet. But regardless of that, what it did do, it had an expansion of volume. So if we had been in a complex ABC up, what we would have saw is that, yeah, we would have backed down. with lighter volume, that volume would have had to be less than 290,000 contracts, and right now you're at 400,000. So bottom line, I expect we're going to 1189 is game to get tested out here. Notes and bonds, bottom line, want higher price. We go over to the let's go over to King Dollar, because the intriguing part here, I suspect what we're going to see even coming into this close is good old King Dollar is going to give it up again. Now this gets really intriguing because King Dollar is at 95,406. This is the dollar index. We've done 21,500 contracts thus far, which is not bad contract volume. We're going into 24,400. We made it to the highs of the 23rd and 24th of August, and in both cases we rejected it. And you're going to see the rejection looks to me like we are still going to have a couple thousand contracts less. What that sets up, once again, that sets up a test of the lower end of this, which is 94,340. What it also does is this. The dollar is in a confirmed ABC structure on the way down. This does not negate that ABC structure on the way down inside the dollar. It has turned it into a complex one, but the bottom line is that you still have an ABC structure on the way down. Amazon was the big number out here today. Amazon reached 1 trillion market cap. Right now you're at 995 billion. Why? Because we hit 2050, and it just had to whack it. Bottom line, the thing that's amazing is that it stayed up. Yeah, so it had a. This is pretty amazing, actually. It had $1 trillion market cap for all of 10 minutes. It laid up there this morning at 11:30, and then bang, someone decided that, hey, guess what? I had made plenty of money, and they put a sell into it, and we came off that high with 154,000 shares. Let me just see something. I'm curious whether that was 1140. Oh, look at that. I want to make sure. Did I say 1140 or 1240? 1 second. So what I'm going to do, I want to bring up these sales. Yeah, 1140. Here you go. I'm going to bring up these sales. You're going to see 1144 right there. That's the first one that started crack. Well, actually, that didn't crack because that only went off at 20. So that's interesting. So at 1140, it was at 2050, and 1144 was at 2041. But you can see 4,500 shares. I see 2,300 shares, 2,000 shares. Well, I guess, the bottom line is that you're selling yeah, there was a lot of selling there. There was actually a lot of selling. They were selling at 2,000 shares at a pop. So that is no doubt when you're selling a $2,000 stock at 2,000 shares at a pop, that's going to put some heavy pressure inside that market. Now, oil. Let's go to the oil market. This is wild out here this morning. So oil, folks, right now is trading down 0.7%. We had a price spread out here of 71.40 this morning. Got up to 71.40 and gave it up in spades. And the last two highs out here was 71.29, which it took out. The actual high, though, for the 6 months is 71.63. This thing took it out in spades, too. Oil wants lower price. Stay right there, folks. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wham! now. Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now trading down 20. You get the Nasdaq off 18, S&P's off 5.5. Let's go over to our man, Mr. Basil Chapman, as we do each and every Tuesday at 20 past the hour. Don't forget, folks, Basil's got an outstanding show right here every trading day, 12 to 1 Eastern Standard Time. Also has a great newsletter, The Opening Call. Now, the way you get the opening call, come over to our website at TFNN, go into newsletters, trading newsletters, can check out The Opening Call, 30-day money-back guarantee. Basil Chapman, what's going on, brother?
Hi, Tom. How are you?
Doing great, man. Happy September.
Yeah, happy September. This is going to be an interesting month. There are a lot of cross currents coming in. We'll see what happens.
There's no doubt, man. I mean, we were interviewing Darryl Martin this morning, and I had said to him, I don't think I've seen so many different currencies moving so quickly. I mean, currency moves are pretty intense. We'll see how the equity markets are going to go, but these currencies really are basically moving in a big way. So well, I'm looking at Dow Industrials, I believe, right?
At the Dow, on the left is the daily chart, in the middle is the weekly, and on the right is the monthly. And you can see in the daily, we've done very nicely. I had a pullback here. Over the weekend, I took a lot of time to go through a lot of charts, especially the Investors Business Daily top 20, 30 stocks, and almost to a stock, it looked as if they were getting extended. Doesn't mean to say they have to pull back sharply, but I think they're starting to, it's becoming a little more difficult now to have, because I think it's more selective. So if you look at the Dow, this represents exactly what I'm talking about in many stocks. So there's an alternate count, as you know, in the Chapman way, we're always looking for that fourth highest peak, peak D. I'll label them alphabetically, A, B, C, D. D's where other things can happen. So this is extended a little bit, and I've got an alternate count. But what I was really looking at is there's just enough strength left, and we're actually long. There's just enough strength left, I think, to squeak to a new high, a recovery high that is above 26,167. And today's turnaround was really important. If we never got that, if we were at the day's lows, I'd have to say, you know what, everything about this looks as if we've already made the short-term top. I think there's just enough that I like to look at waves, and this is as if there are a couple, it says high tide at noon, but in fact there are a couple of waves that never saw the sign, so you can still get waves going up the beach until about 12:06. And I think this is what we're looking at here. There are enough stocks that can push the market a little higher. I don't think we can tackle in this phase, I might be wrong about this and we'll know very soon, whether this is the move that will tackle the all-time high of 26,616. That's going to be, that's something different. Now, this rectangle formation that we've closed above in the weekly chart is very important, and the monthly chart has still got this very positive U-shaped pattern, which says there's a good chance in this cup formation that we should get close to, get exactly on or just above the previous high, and that was peak E in the Chapman wave in the monthly chart at 26,616. So I'm going to try to remain as long as possible. We'll see what happens. And then I think we have some kind of a pullback. The fact that we've taken so much time in this rectangle formation to move higher, to me, that is a positive because it says that every move has had a slightly higher high and a slightly higher low, and that says you're kind of forming a stair-step base. So I'm looking at this and I'm saying, okay, looking at the chart, intermediate term, the 25,500 to 25,300 is going to be a really important cushion if there is a pullback. What I'm finding very significant is if I go to the S&P, the SPX.X, that's right there, the S&P 500, that monthly chart, now, of course, this is a brand new month, first day of the new month, and we've already extended leg E, and that's important. And you can see it's quite a bit higher than the 2872's high that was made back in January, just like the Dow did, except the S&P has gone to a new all-time high, and it broke that rectangle pattern and went even higher. So, and this has also got an alternate count, and it looks to me, I don't know how it's going to do that, it looks to me like there's just enough strength for a couple of extra waves to come to make slightly higher highs in the S&P as well. And then we can go to the QQQ, which is the Invesco QQQ Trust Series. This is basically the NDX 100, and there's no other way I could count this. This is a peak seed, 187.52 high. It was made 3 days ago. I think somehow we're going to break that to go to a leg D. So in the shorter term, I think we're getting close to at least deciding whether or not there's a top coming in. And if I do get those Ds and Es as tops in the shorter term, then we'll start putting on short positions. I've been a little reluctant to do that just yet, even though some stocks have really taken a dive, like Nikkei today, and that's been impacting the Dow. So the fact that the Dow's come back to minus 17 after being down about 160 points, I think is good action because there wasn't anything positive to really move the market other than buying. So to me, that's good. That's good action. So the other aspects that I'm looking at, so we still have long positions. Most importantly, it's this particular move now in the TLT that I'm following closely.
Okay.
The TLT is the iShares 20-year Treasury Bond ETF. And you can see it made a peak back in 6th of July at 122.92, dropped sharply to 118, rallies to 122, another peak E, pulls back. So it's starting to make lower highs and lower lows. Now it's in the middle of this range. So I'm watching this real closely because I still believe that money will migrate from the equities. If there is a sharp sell-off that includes, well, you have to have all the indices, this rotation that's happened where some of the, we've seen this with the IWM. The IWM was weak, the Dow was strong. Suddenly, IWM is strong, and some of the other indices are weak. So this rotation, for a real bear phase, I want to see all the indexes have at least sharp 3-day consecutive down moves, and then I think we've started something more serious. So I'm looking at this and I'm saying, if that's the case, it seems to me that money will come out of equities at that point and go into the so-called safety of bonds, and you can see that this TLT is in the lower range. But if it starts, I would suspect that if the TLT is trading at any point in the 123 or higher area, market is going to take it on the nose, and that yields are going to start coming down as bonds rally. That's kind of the way I'm looking at it. So we are selectively long, starting to build up cash position, getting ready to do some shorting. We'll see whether that works out. But so far, we're waiting for just a couple of nominal new highs. Doesn't have to be very high, just needs to be slightly higher than the previous peaks.
You know, I'll tell you, there's no doubt between the TLT, the note, and the bond market, it's going to be intriguing watching the next 4 or 5 weeks play out because, what you're hearing, off a lot of folks, is that, this time of the year is when you can actually take a hit. You know, that's the reality.
The fall is the fall.
Yeah, and then listen, the notes and bonds haven't fell apart. And
nope, they haven't.
You know,
and that dollar, you know, it's very interesting. We're looking at I'm showing the dollar here.
Yeah.
We are, of course, it's still long from 90, and it hit 96, 98, but it's had a nice bounce. I have to at least call it for a bounce for now, but it's a little stronger than I anticipated. And the fact that gold did pull back, actually, dollar didn't bounce that much when you think of how deeply gold has pulled back.
That's for
so
sure.
I'm watching this very closely because, you know, currencies, you were talking about currencies before. Currencies tend to last in a directional move for quite some time.
They
And
do.
This monthly chart has been up for the 8th month that it's running. So I'm watching the dollar closely. It's going to be important what it does over the coming week.
And listen, folks, the way you get the opening call, come over to our website at TFNN, go into newsletters, trading newsletters, you'll see the opening call, 30-day money-back guarantee. Baz, you have a great one, safe one. Look forward to the show tomorrow.
Thank you very much, Tom. You too.
Thank you. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. Let's take a look at some of the higher volume equities out here today as we're kicking into September. You get Advanced Micro. That's caught a bid that's up $2.85, trading $28.02. Facebook is down $4.32 at $172. You get Apple off 80 cents at $2.28. You get Snap off 33 cents, $10.57. Nike's down $2.32 at $79. The cannabis stocks, folks, are going to the moon. You have Telray up $10.93, trading $76. Let's see, you got Oracle up 9 cents. If we go first into Facebook, we take a look at Facebook. So you're going to have Facebook as well as the Twitter. Jack, you can have Sheryl Sandborn from Facebook, Jack Dorsey from Twitter, TWTR. They are going to be at the Capitol tomorrow. They're going to be testifying. Now, if we take a look at both of these equities are off their highs. Facebook, high was generated at $218 July 25th. You're at 171. Down on volume. Bottom line, this baby looks to me like you're going to get down to the 149 level. Right now, you're at 171. What's going to be intriguing is, number one, the last time that this came down, you know, press-wise, you get pros, cons, or the whole best, you know, whole route there, that's for sure. My take on this is that they didn't even know the right questions to ask these companies, okay? That's where this seems to be. I mean, the congressman they don't seem to have a clue as to actually how this deal works. Now, the intriguing part is this, is that when I look at both companies, so first you have the aspect that, okay, so if you have outside influences coming in, and basically, whether it's trying to do business in, do politics in, or whatever, right? That's one aspect, and if that aspect is on the hacking aspect of it, meaning that there's a whole concerted effort that is going after one base, I think that they'll get a handle on that. What they won't get a handle on is this, so picture something. When you take a look at television advertising or radio advertising, right, on a continual basis, the bottom line is that there's a million ads, not a million ads, but there's plenty of ads that are on TV, have been on TV, and I'm going back 30, 40 years, you know, every single year, particularly in the political arena. That bottom line, you know, propaganda wasn't untrue. I mean, politicians, they do it all day long. They say, hey, this happened, this happened. Bottom line is none of it happened, okay? That aspect on Facebook and Twitter, I don't think you're going to be able to stop, because what ends up happening, there's not a differential between TV ads saying that this person said this versus on Facebook that this person said this. The companies themselves, the differential is they can separate so many groups, so many zip codes, so many feelings that's going to be out there, man. That's in the game now, and it will be in the game for a long period of time until someone else figures something else out that can give a person or group an edge in the marketplace, because that's what it's all about. You know, bottom line, that's what it's all about. So Facebook, I suspect 149 we're going after. Twitter. We take a look at Twitter. Twitter trading $39.92. This is these charts look exactly the same too, which is pretty wild. Twitter's off its high of 47 bucks. Came down hard to 31. Laid out there on the 30th. Twitter looks like it also wants to get down to this $26 number. So there's going to be some action out here, and we'll see how the questioning goes, because the questioning is going to be crucial, because one of the questions should be, right, this is what's going to be intriguing here to see if, in fact, their staffs have done any type of big homework. Because what happened last week was this. Google and MasterCard had done a deal. Oh, they have done a deal, not had done a deal. Okay, let me get to this deal, because I'm going to walk through this slowly so you can really understand how this deal works, because when I was going through this, it took me 2 or 3 times to really get my head wrapped around how this works. Okay, so in the past year, Google made a deal with MasterCard. Now picture this. There's 2 billion, with a B, MasterCard holders, okay? I'm sure, you know, when we look at our wallets, we all probably have a MasterCard. If not, you have a visa. But it doesn't mean that one deal didn't get made with Visa yet. But here, this is how this deal came down, folks. Okay, so what this article is about is that it was claiming that Google was negotiating with MasterCard for 4 years before this deal can come down. That's what two people said about the deal. But this is how the deal works, okay? Is that Google was running ads and wanted to see how many ads that we would be pushed out over the internet and not bought something online, but actually went to a store and bought something. And, okay, so MasterCard made the deal with them. And of course, that's monster data. So the differential in this deal is that we have the internet here on your left-hand side. You get physical stores on your right-hand side. You get MasterCard on your right-hand side. You get Google on your left-hand side. They wanted to match that up. You and I go out there. Let's say we go out there and, okay, it's football season. Bang, I want to go look at a football. I'm giving, my cousins a football or my, a couple of little kids or whatever, okay, right? So they want to see, okay, did he go online to buy it? Nope, didn't go online to buy it. Does he have a MasterCard? He has a MasterCard. Did he go into Dick's Sporting Goods and buy it? Oh, yes, he did. Okay. So what Google's claiming still is that they don't know, they wouldn't know my name, they wouldn't know my age. No, they didn't. Let me see if I bet they know the age and gender. They're claiming that it's a double-blind pool that Google has that, okay, so we do not have access to any personal information from our partners' credit or debit cards, nor do we share any information on the partners. The company said, that being said, though, you can see that they didn't say that they didn't have your address, just your age, your zip code, all of that. Okay, my point is this. So that's going on. One of the great questions for Facebook and Twitter, do you have such a deal like that with other big credit card companies? Because the matching of this data, folks, is a monster. Because whatever they've got in the last year, now Google would know that, okay, we can go to another box store, we can show them the results, we can say, you can advertise here, and now we want credit for more than just going to on the internet from these ads. We want credit when you actually physically go into the store. Stay right there, folks. Come right back. Dow right now. Down 20, Nasdaq off 19, S&P's off 5.5. Coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. If we go take a look at a few of these cannabis stocks, folks, they are on fire out here today. So Canopy Growth, this is trading up 11%, up $7, trading $66. This pushes this market cap out to $14 billion. And it's doubled in basically 15 days in price. It's $32 on the 14th of August. So let me just see this for a second. So it's pretty amazing, actually. So they did 25 million last quarter. They do expect, what is happening is this. October 17th is the big date up in Canada. Bottom line is recreational marijuana gets legal, and that the same day, bottom line, anyone up there can buy it. Market cap wise, that's quite a market cap. We go take a look at, when I was just doing the highest volume equities here, this Telray is something else. So Telray went public on the 18th of July at $17. I don't think it ever traded there. You have to get it fresh. Yeah, it didn't trade there. But it did trade at $20. So this is a company right now that has a $7 billion market cap. This doesn't even make any sense. Let me see this. Okay, so yeah, this is hard to comprehend. Let's watch this. Hey, I like these equities. I think they're going to be worth a lot of money, but right now, this doesn't make a bunch of sense to me. So watch this. So you have a Telray's an equity that the next quarter they plan on taking in $9 million. They took in $9.7 million, and at this price, it has a market cap of $7.1 billion. And just watch this for a second, just so you can get your head wrapped around this. Okay, so when we take a look at revenue, they took in $9.7 million. You go to Canopy, and Canopy last quarter took in $25 million. So it took in 3.5 times the amount. Market cap is double. If we go take a look at either one of them when they plan on making money, bottom line is that they don't in the next couple of years. Canopy, for some reason, on the third quarter, no, they don't play. They're on the 2019 fiscal year right now, and they plan on losing 49 cents this year. For 2019, Telray plans on losing 40 cents this year. Let me pull this back. Okay, so let's see if we can figure this out. This is one, and I mean, I can understand that there's no doubt the push here has been twofold. The push is that you have the liquor companies that want in the marijuana business, and they're scrambling to get into it. Okay, so you get this is going to be pretty cool. Okay, so Canopy is an ABC structure up on a monthly basis. So let's look at this. It's a big one too. So your A point is $6.58. Your B is 48. So you get basically 42 bucks. Okay, which gets you 72. So you have Canopy confirmed ABC structure on the way up on a monthly with a 72. So you're 66.92 right now. Okay, that's not the end of the world. Telray. Let me go. Telray, 1 second. Okay, so Telray is trading. And what's cool here, folks, is that what I was able to do, I don't think I'm going to be able to do this with Telray, but I was putting, yeah, I can't. I was doing it on so Canopy, I had put that on a monthly basis, and that's how that was an ABC structure on the way up. Telray, okay, cool. So this is the way we can do Telray. Telray is an ABC up, but I want to see if this does more than a 1 to 1.618. So $22 would be a A, 44 is your B. We get 20 bucks. So even at 40 bucks, well, this is interesting. Okay, 1 second. Now let's figure this out. 20 bucks. Okay, there we go. Okay, it'd be 32. If I take 32 plus 49 and give it something to breathe, that's 81. Okay, so the way this is set up right now is at 80, you're at 76 with Telray, approximately 81, 82. That is a 1 to 1.618 ABC structure on the way up. And what happens, folks, is that you don't want to see, if you're long an equity do a 1 to 1.618 or over ABC structure up. Those, when they do that, that is a blow-off for a longer period of time. That's how that works. So we'll see. Telray's only got to get up about another $4 or $5, and that's what we'd have. And that's the same with the ABC structure on the way down. If you want to try to get long in equity, when they do an ABC structure on the way down, and it is that type of an extension, meaning a 1 to 1.618, most times what you're going to find is that you come into a bottom. And what a 1 to 1.618 means is that, let's say your first move is $10, your next move would be $16.18. That's an overextension in a huge way. And when the market does do that, most of the time what you're actually going to see is that it'll go past the 1.618. It'll do a 1.7, a 1.8. I've seen them do a 2, but that's the most I think I've ever seen one do. And then intraday, the bottom line is that it just blows up. If we go over to Cronus, Cronus also. So this here has a market cap of 1.9 billion, and this does 3 million. Okay, I wouldn't. With Cronus, man, I'd be out of Cronus right now. That's my take on Cronus. You know, bottom line, you know, just wait for a pullback. It's going to be up at the highs again, yeah. But guess what? That is funny money in a huge way. There's no doubt about that. You know, you're talking, and with Cronus, if you're watching Tiger TV, you're going to see when I brought up the Bloomberg and everything else, there was guidance going out. With Cronus, there's not, and that's a problem. And watch this. If I bring up, you want to see the amount of employees in Cronus? I think there's 7 employees. 7 employees. That doesn't fly. Let me pull up Telray for a second. Oh, great. Telray doesn't even show me any employees. There's going to be employees, but where Canopy has 1,000 employees. Yeah, those 7 made a fortune, no doubt, man. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. If we go over and we take a look at Tesla, you're going to see what you had out here today is that, and I'm sure we're going to be getting a lot more of it. You know, Mercedes coming out saying, yeah, guess what? They're going to have lots of electric cars. Everyone's going to have lots of electric cars, folks. Bottom line, Tesla's going after its lowest swing points. You have some volume behind the move out here. We're $288.40, down $13. It looks like Tesla's going to go after this low that's laying out here from the 2nd of April, which is $244. Right now, you're at the $288, and that is a high volume low, and that high volume low is going to get tested. The real kicker here is going to be once that we actually, so 244 is the number to get tested. When you get back inside 269, it's going to get very dangerous. The reason being is that this is not the only high volume low that Tesla has out there. We get another one that's going back to February 12th, the week of February 12th at 141. And what's really important as investors and traders, when equities turn around, you want to know where either gaps are or high volume lows are. Because guess what, folks? They're like magnets. And once it starts, it's a real problem. And in Tesla's case, I would say that the bigger issue is that, you know, down about another 7 or 8 points is going to get us in a lower range that we broke out of in February of 2017. We've been up here a long period of time. That being said, all the volume's down the lows. You break this baby out, and then it's going to be a C you don't want to be a. And, you know, between the problems that Musk has had just directionally, never mind the manufacturing problems he's had, now what you have is that we're going to be hearing a lot more about electric cars, and it's just not going to be the Tesla deal anymore. Stay right there, folks. Going to be coming back with some numbers after the close. Dow Industrials right now down 29, Nasdaq's off 22, S&Ps are off 6.5. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful day. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Kicking into September, folks. Here we go. Coming into the fall. Don't take anything personally. Transform your life. When you refuse to take things personally, you avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will simply disappear if you don't take it personally. Market-wise, let's take a look at it out here. We have the Dow Industrials down 12, Nasdaq off 18, S&P's down 3.5. Now, bottom line, folks, if we go take a look at the Dow right off the bat, what you're going to see, so we have sideways movement out here. What we did have in the Dow Industrials, though, is that you actually rejected lower price, and, in fact, we did have lighter volume. We did 783 million. Because what we had done on Friday is actually, which was really hard to do, we actually got volume in the Dow on Friday as we moved lower. We got 855 million. So what does that set up now? Bottom line, you're going to set up a little chop. You're going to set up a run up to the highs once again in the Dow, I suspect. That's 26,167. We had movement out here today, there's no doubt. We got down to that 25,805, and it moved off that low 145 points. So we had the movement out there. We get and take a look at the S&P, the cash S&P. What you have with the cash S&P is a little bit different number here. Now, cash S&P, sideways move. That being said, bottom line is that I suspect that does not have to get up into the highs. Why? Because there's still indecision inside this S&P in a big way. So basically, sideways move. You had the expansion of volume. I expect the good old S&P wants to run down and try to get back inside its lower range. Now, inside that lower range would mean that the cash S&P would get down to 2863, which is 2892 right now. If we get over and we take a look at the futures and see how these futures have set up, what we have here inside the future market is this. You're at 2898. This baby pushed into the breakout. It broke out on the 27th. Had some, real conviction on that breakout too, by the way. Bottom line, start banging into that. So we'll see how this shakes out tomorrow. But I do expect what you're going to see is that it's going to try to get into the lower part or the top of where it broke out from. NDX 100 is the same way. Now, what's so intriguing about this is that the NDX, no doubt, have been the strongest indices out there. It's subtle out here today, but the NDX is laying out the exact same way as the S&P. Dow is a different ballgame, so they're going to be fighting each other out here in a big way. Gold contract. What do we do with the gold contract? Gold contract still can't catch a bid, and you get currencies falling apart all over the world. Bottom line, you're back into the strength that was established out here on the 24th. The bottom of that strength is 1198. Now, the bullish part would be that, yeah, you didn't hit 1198. The bearish part is that since April 4th, we've only got 1 day of strength, and that was on the 24th of August. So bottom line, that being said, you're backing into that strength with way too much volume. We've done 403,000 contracts out here today. I believe we were at 293 in the, yeah, you were 294. You're going into 294. So the highs of the lows is the same price, meaning 1198. And that can be tested. That's how that's shaken out. Notes and bonds, they are the ever-ready bunny. They still want higher price. It's pretty amazing watching the whole thing shake out, folks. If we go take a look at the 10-year first, what you're going to see, 10-year back down. Bottom line, you're backing into the strength. The strength we're backing into is big strength, by the way. And you've had a couple different ones. The strength that's coming into was from the 10th of August. That's where the 10-year went from 119.19 up to 120.08. Big number. We backed down today, 1.3 million contracts. That's backing it to 2.3 on the 10. If we take a look at the 30, you're going to see the 30 is set up the exact same way. You're backing down. 30 went down a full point out here today. You did do 370,000 contracts. I'd have to go back to the other, we're rolling over. I have to go back to the other contract to get the volume. But that was, well, here, let me do it right now. USU 8, since we still have it. I know it's going to be lighter. What did I say? I think, because I believe this went up in 400,000. So it's going into 540. Interesting. Well, it's definitely, what's interesting is that we had actually come down at 540,000 on the 28th. We're going up on 384. I see, 384. So you are back, on the 30, you did back down with some juice. King Dollar, it's going to be intriguing watching King Dollar. King Dollar has been on a one-way track, since April. It totally makes sense, right? April is the last time we caught a bid in the gold contract. April is when dollar takes off from 88. Right now, we're at 95. That being said, what we had out here is that King Dollar tried to get over the C point of this ABC structure on the way down. It made it today, went to 95,680, gave it up, has 22,000 contracts. You're going into 24.5. So bottom line is that you still have an ABC structure on the way down. That's not negated. It didn't hold price out here again. That's saying there's selling pressure inside of this. And I expect what you're going to see is, once again, we're going to go right after the lowest swing point in this particular case is 94,340. We look at some of the higher volume equities out here today. We had Advanced Micro up $2.89. Facebook was down $4.50. Facebook is going to be in front of Congress tomorrow. You got Snap down 31 cents, trading $12.59. Amazon made $1 trillion, folks. Made it for 10 minutes, and then bottom line pulled off $10. We hit $2,050.50, and that was at 11:40 a.m. this morning, and it only stayed up there for 5 minutes, 11:30 rather, because when I actually did pull that up, I was watching it, and that's you had some sellers up there, 2,000 at a pop. They were selling at a 2,000 stock. That adds up, and it adds up pretty quickly. We some of the other higher volume equities out here today. We had Nike was down 260. The pot stocks. Telray was up $11.81. That, I would say, is kind of outrageous. But bottom line, it is what it is. Stay right there, folks. Got our man, Mr. Jason Path, coming up next. We're going to be growling and prowling up here. Dow down 12, NASDAQ off 18, S&P's off 3.5. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials closed down 12, NASDAQ off 18, S&P's down 3.5. Let's go over to our man, Mr. Jason Path, as we do each and every Tuesday at 20 past the second hour. Now, don't forget, folks, Jason kicks us off every trading day right here. Morning market kickoff, 8:30 in the morning. Outstanding program. You want to get up, start the day the right way, looking at markets, whether it's overseas, whether it's U.S. markets, whether we're talking currencies, whether we're talking commodities, whether we're talking equities. Got it all. Half hour packed with great wisdom, folks. The easiest way to get us at TFNN is right on your cell phone, folks. What I'd love you to do, go to YouTube, put in TFNN in the search bar, just hit subscribe. And you're going to be amazed. Every program, you'll be notified when the program is up. You can watch it or not watch it. Bottom line, you're going to get great digital content. Bottom line, hook it right into your Bluetooth in your car. You're off to the races. What's going on, brother?
Not much, man. How are you?
Doing great. How was your weekend?
It's good. We went to Chicago. Enjoyed the last day of summer, I guess, there on the lake. It was nice. How about you?
Fun. That had to be fun, yeah.
Yeah.
So how hot was it in Chicago?
It wasn't too bad. It's hot today, though. I live about 3 hours south, and it is scorching in the official sense. Yeah, it's probably the hottest day we've had all summer, which is ironic given that, yesterday was Labor Day. But
yeah, no, we get hot weather in September, too. And then it just drops right off, So
yeah, man.
So listen, hey, folks, you got to get his newsletter. The way you get his newsletter, go to thedutchbook.com. It's an outstanding newsletter, and it has so much in it. And I'm going to start. Well, where do you want to start?
Where would you like to start? I feel like you wanted to start somewhere in particular. So
yeah,
now I'm
I did, because these notes and bonds, man.
Man.
There's such a disconnect. Well, I'm not sure whether there's a disconnect, but each and every time, and this has been going on for so many years. I remember, I remember people shorting bonds 9 years ago that interest rates were supposed to go up. Then 6 years ago. And then last year, forget it. That was supposed to be the best trade in the world, that you're going to basically short interest rates, folks. And guess what? We're still at 2.88 on the 10-year. So what do you think?
That's right.
Yeah.
Yeah. So it's supply and demand, and what's been unique lately is Herculean amounts of supply issued by the Treasury, but significant demand. We're off a bit today on yields. Yields are a bit higher today. We've got a big corporate issue week this week, so I think treasuries were a bit softer today. I expect yields to come back in through the balance of the week. It's actually a down week with treasury issues for the first time since April. Everything across the curve is lower in terms of supply this week, so yields should come in. But with respect to bonds and rates and yields, I think it's driven primarily by a flight to quality and safety. I think it's going to keep yields low for some time. Eventually, it's going to, if we keep pushing, upper threes over 4 on GDP, over time that will have to turn over. But for right now, you look at what's happening around the world, and there's nowhere else to go with the U.S. dollar. And whether it's long dated debt because you're a pension manager, or shorter dated debt because you're just you're sitting out some riskier trades elsewhere.
Yes.
U.S. yields they're low, but they're better anywhere else, and the stability is unmatched. And so these other countries are starting to have some challenges. Even a country like Italy, and the challenges in the Spanish financial sector are driving folks to quality. And treasuries are about your only shot right now.
Yeah.
For any kind of yield, you could do a bond for 30 basis points.
It's amazing. It really is. So what I'd like to do, it's Lex. Something that we haven't talked about, folks, okay? Jason's talking about it in his newsletter because he's talking a lot of currencies also. And it has to do with, he was just talking about the dollar. So picture, you have the dollar index, folks, right? Which, that's what we're always quoting. But then what you have the dollar just flat out against currencies. And what has happened here is that whether it's in India, whether it's in Turkey, whether it's in Venezuela, well, forget Venezuela, man, those poor people, whether it's in Argentina, whether it's in Brazil, our dollar has basically got so much stronger in some of these countries. It is like, it's not that it's blowing my mind. What's blowing my mind is that, that metals can't catch a bid when the dollar is so strong. It's like, okay, are all these companies going south and don't have any more money to buy? Now, specifically what I want to talk about, Jason, is this. I was looking at your newsletter, and you're talking about the Indian rupee. And what happens, folks, is this, so picture this. If we go back to 2008, it was 39 rupees to $1 US. Now it's 71. And the thing that's intriguing is that if I go back to the Sensex index, which is, their main index, what you're going to see, folks, and this is what's important about correlations, is that, this looks like it's an all-time high, but the reality is that that's an all-time high when they're currency just got cut in half, right?
Mm-hmm.
Amazing, man.
Yeah, no, it's absolutely amazing. And, India specifically, given their they import a lot of energy and oil.
Okay.
A tremendous amount of oil. So the weaker currency is a real challenge. It's a real headwind for them in that sense. And yeah, it's interesting because we talked about PEs this week in the letter, and folks are talking about China, India, some of these other places. Evaluation. If you look at the PE, it's not really attractive it's not attractive at all in my book, but it's really hard to make that case. I think that, in India, you got to go country by country. It's interesting because you see some level of contagion, but then when you go country by country, you see similar issues, but you still got to go country by country. In India, you've got a massively weaker rupee. You've got a current account deficit that's rapidly growing. You've got to import a tremendous amount of energy. And the thing about energy is it is cyclical in the sense that it will grow or contract with economic demand, but at the end of the day, you're still going to have to import that before you get to something like gold, like you were mentioning. It's more of a staple, right? So you start to erode your ability to bring in anything else. And I don't know. When I look at India, when I look at a rupee,
the reality is that if you don't get liquid, they're not liquid, folks. It was just like, in the crash in 2007, 2008. Everything went down because no one had any money, folks. So it doesn't matter. It's right. That's where those countries are going right now, which is pretty amazing.
As we back, we started backing liquidity out of the system in the United States. QT started last fall, and you can see the volatility pick up in the indexes here domestically. You can see the impact to Treasury demand. You can see the impact now. The reduction of liquidity in emerging markets, and just a near thirst for the dollar as liquidity contracts. And you can't blame it all on QT, but something's happening. And the problem right now, as I see it, is I don't know what the speed bump is, much less the stop for the rupee right now. 71.50 becomes 72.
Talking to you right now is like. Really, when I go to the country, I'm saying to myself, and what does stop the dollar from going dramatically higher? Because the reality is that anyone that's been buying it, knows that, hey, guess what? A dollar's still a dollar, and you can spend it, versus these other currencies. So I can see folks in those countries buying dollars too,
That's right.
Right.
And the thing about, we call China and India emerging. Those are countries of 1 billion people. They're the two largest countries on the planet. Right. That's a lot of dollars. Even though they're smaller economies than ours, they're both not.
Totally. Here, stay right there.
Yep.
Jason and I are coming right back, folks. Dow finished down 12, NASDAQ off 18, S&P's down 3.5. Our phone number is 877-927-6648. Give us a call, folks. We want to hear what you're thinking.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Appreciate you growling and prowling with us. We got our man, Mr. Jason Path, with us. And don't forget, folks, Jason kicks us off every trading day. Morning market kickoff right here. Easiest way to get us right on your cell phone, folks. Go to YouTube, hit TFNN in the search bar, subscribe. You're going to get all the digital videos each and every day. So let's talk one of your favorite equities out here, Tesla.
Oh, man. Let's do it. I mean, seriously.
Yeah.
Can't catch a bid. It's been an amazing ride. The bonds are under tremendous pressure, too. Yeah, I watch the bonds as much as the stock.
Yes.
It'll be interesting to see what the SEC does. I think some folks are quite skeptical that anything material will happen, but I've never seen something that blatant. I mean, you see stuff behind the scenes, right? That comes out later that folks are actually, doing something intentionally criminal. But something just so public, so blatant. I think Musk. I think they've got to. There has to be some type of sanction. Clearly, the board is. I don't know. I think the winds have shifted there, and I think we're lower for longer for sure. And
I don't know if you heard this out here yet, Jason, or folks. When I was coming in this morning, Tommy was doing the morning show with Kevin Hinks before I got in here, because I had been doing a show with TD Ameritrade, and they were talking about Tesla tweets. So there's a site right now out here, folks, called TeslaTweets.com. And I get back in my car at lunchtime, right, Jason? Mm-hmm. Blasted. You're going to hear this, folks, everywhere. This happened to be on Bloomberg, but I bet it's on CNBC and CNN. A law firm, TeslaTweets.com, and they go on to explain that if you bought Tesla from the minute that he spoke, okay, bottom line, this is going to cost them a lot of money, folks, a lot of money. And then, so that's the first part. The second part, I think, the bottom line is that you had out here this morning, Mercedes-Benz is coming out and saying that, hey, listen, we're going to have high-end Mercedes in the second half of this year. That's right.
Second half of this year. I mean, we're not here to, talk cars, but which one would you buy? I mean, there's not even a question. And I know there's some diehard folks that might not like to hear me say that, but I mean, it's just. I mean, I was thinking this weekend. Their reputation from a quality perspective is absolutely taking a hit. Even though it's diehard Tesla fans I know, you get that yeah but thing. Like, your paint looks weird. Yeah, but we're changing the world. You had to take you in to get realigned on day 2. Yeah, but it was an epic. I just, you see, and again, it's anecdotal, but I mean, it's almost customary now. You make a list when you get your Tesla delivered of everything you got to take back and address with service. And, their service thing's a mess too. You got to call in and, there's these satellite centers all over the place. And it's like you need your door handle fixed. And it's easier to get a Supreme Court nominee through than to get a new door handle from Tesla. It's just, it's a mess.
Let me ask you this, right? what you just said, the door handle versus how long it would take you to get it fixed. Like, how long have you understood that service problem has been out there?
Well, I mean, I would say most of the reports, anecdotally, I get is stuff just goes unresolved.
Yeah, no, I agree. No, the only reason I'm asking, okay, I didn't realize that what Jason's talking about, folks, is this. This is not like you buy a normal car and something happens and you can bring it back and get it fixed. And I didn't realize that until last week, because one of Tesla's biggest fans, right, the guy that drove cross country with the Tesla and did the whole bit, he had a tirade on the I don't know which side I was reading it on, but it was like, that's what it was about. What it was about is that there was a part that he needed. He'd have to go 300 miles to go get the pot.
Right.
The
It's
pot.
a mess.
Yeah, I mean, and it was like, I thought I was saying, you got to be kidding me, man. And so that's why I was asking is, I guess that's something that's been out there for a while, right? That's interesting.
Yeah, their service thing is it's an afterthought. It's a total. I actually live down the street from one of their service centers in Rockville, Maryland, and it was not a smooth operation. Again, anecdotal, as they can't defend themselves here. It's not fair for me to say, but I mean, their servicing there's no one that will say that is anything close to best in class. And when you're paying that for a car and waiting for 2 years, you deserve best in class. Guess what? You go to Mercedes, you need a new door handle, you drive down the street to the dealership. Like, there's just no competing with that if you're Tesla.
Right.
They just can't compete with it.
No, you can't. You can't. And of course, what ends up happening is that we all have warranties and guarantees, because you can't even own a high-end car anymore if you don't have a warranty on it, man. That's the bottom.
Right. Yeah.
I mean, that's why they give you warranties that are 4 years, 5 years, whatever they are now, folks, because the differential is, it's just part of the buy, I think. Do you know what I mean?
Mm-hmm. It'll be interesting to see what happens. I mean, I think they're headed to bankruptcy. I think it's closer than it is further. They start into the wall with debt.
Well, they have the debt load first off. Then they have, and one of the parts of the debt load is going to have to do with, they have to get the price over this, 360 or 370 or something, right?
Yeah, it's 360 for the converts, yeah.
Okay. And if they don't get it over that, folks, what ends up happening is they have to come up with the cash, and that's like a disaster.
Well, and you just have to start accounting for it ahead of time. I mean, you have to put it in a reserve ahead of time.
Yes.
It's bleak, very bleak.
Pretty wild, I'll tell you. So now, let's go back to the emerging markets in general then. So when we look at emerging markets, it's almost like, after we've been talking here, what is going to dial these babies out of here? That's like the jackpot question, right?
Yeah, that's right. I mean, to me, my opinion, the biggest factor has been liquidity. As liquidity ran strong, we had a couple of banner years of emerging markets, and as that has been vacuumed out of the system, by the way, more to come. EU at some point will start to tighten, as will BOJ, but. And I don't know how you reverse that yet again. It's just less liquid. You had these massive
makes sense, right?
Debt loads of these countries built up on this massive amount of liquidity, and that's just evaporating.
And so watch this, folks. The liquidity Jason's talking about goes like this: the Fed prints money, the Fed buys our own bills. That gives extra money for all the banks, get extra money for all of us. What do? You got to go put it to work.
That's right.
It gets put to work across the world. Now, the Fed starts pulling back. They pull back. First off, they don't even have to go up on rates. All they have to do is stop buying as many bonds, which they've done. That starts tightening it up. Guess what, folks? Everything starts pulling back the other side. And we've never gone through the Fed, what the Fed did in 2007. So now the question is going to be like, okay, man, we know there'll be a turn.
That's right.
But guess what, folks? I don't think any of us know what that turn's going to be.
No. Yeah, I mean, who knows, but
it's it looks like it's gonna, it would seem to me it's gonna be a credit crisis again in those countries, and it's gonna be who's holding the bag, because those dollar bonds aren't gonna get paid, man.
Yeah, well, the challenge, what's different now is, we were kind of saying this before the break, I mean, India and China, I mean, these are massive, Brazil, massive countries. Their multiples are higher than they were in 08 or 98, or, you know, these are kind of 10-year cycles we've been going through. You know, the amount of money is exponentially so much. You know, we had just a simple bar chart in the newsletter. You know, in 08, corporate debt in the EM world was around $2 trillion. You know, now it's approaching $4 trillion. You know, it's 2x in 10 years, you know. It's just so much more now. How you reverse that?
I'm so glad you brought up 1998, 2008, or 2018, man. I forgot about that.
It's like, you know, 10-year cycles, man.
Cooking brother, hey, we look forward to the show tomorrow morning.
Can't wait, man.
Thanks, man.
Thank you.
Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Folks, don't forget, Jason kicks us off. You can get his newsletter by going over to thedutchbook.com. Check it out. You know, we're talking currency, so I want to go through these currencies for a second, because when you see the destruction, bottom line, folks, we haven't got contagion yet, but guess what? When you have this many countries in the course of 5 months with their currencies imploding, it's a problem. The reason it's a problem is that these are major countries, lots of people, lots of debt to lots of banks. That's how this shakes out. So if we go over to South Africa first, South African Rand, right? We go back 5 months, South African Rand was 11 Rand dollars to $1 US. Out here today, 15.34. Bottom line, it looks like it actually wants to go up to the all-time high, which is up there at 17.91, and that was in 2016. The economy in South Africa, basically now they did slide into a recession. That's the last report that came out, and that'd be the first time since 2009. Now, we want to go over and we take a look at the Turkish lira. That is trading at $6.60 lira to 1 US dollar. You go back there 5 months and you're talking about 3.8 to 1 US dollar. Last high out there generated 7.2. Argentina, huge mess, right? Peso, with, let's see, PESO. We take a look at the peso. The peso's trading 38.9 pesos to 1 US dollar. This has been a vicious implosion. This lost half of its value in 4 months. That was at 20.23 pesos to 1 US dollar. We go take a look at the UP. Let me pull this up. Yeah, I got it. Okay, so this would be I want the Indonesia rupee first. Okay, so first we're going to go to the Indonesian rupee. Okay, so that's at 14,935 rupees to 1 US dollar. And this is not as bad, but it's still bad. This was 13,759 to 1 US dollar. So you'd lost value there. And then, of course, to the Indian rupee. This one here lost big money. But this one is actually pretty crazy, because so this is 71 rupees. 4 months ago was 64. Big numbers all over the place. And if you want to see, when we just put up the rupee from 2007 to now, basically lost more than half of its value. What also happened, though, that's when you want to see equities, when you actually take a look. In fact, I'll do this right now. I want to show you this. When you take a look at how important currencies are, what I'm going to do is I'm going to bring up the Sensex index in India, and I'm going to change it from rupees to US dollars, and watch what ends up happening here. So we are at all-time highs in this index. That being said, the bottom line is that you can cut this thing right in half because of the fact that their rates went half, right? So here, watch this. I'm going to take this. I'll put it on a 15-year chart. So 2008 at the crash, this was at 7,600. You're at 38,000 right now. But that's in rupees. Now let's go into US dollars. And wait to see how this changes. Oh, baby, this is pretty intense. So then, what you have now is that we are at, in 2008, you're at $539, and we are at $534 today. So we're at the exact same price we were before the crash. So bottom line, it's not that bad. But you can see there's been no value. This hasn't broken out of its 2008 highs in US dollars. It got up above there in January and then gave it up. So the point here goes like this. Until there is contagion, there isn't contagion. When contagion comes, folks, it comes very quickly. When Jason was just talking about 1998 and then 2008, I remember 98 very well. Because what happened in 98, it started in Indonesia, and bottom line is that, you know, Indonesia is huge. There's no two ways about that. I mean, that might be, anyway, it's hundreds of millions of people. Bottom line, started there. Then it went over and hit Russia. And what happened there, as soon as it hit there, it was long-term capital that had bets on those types of debt structures. Bang, immediately. it hit U.S. banks. That's how this went. Now, in this particular case, I just went through, 5, 6 different countries that are getting toasted in a big way. And what ends up happening? Nothing yet. I suspect, guess what? We will see some problems out here. We had a tiger that wanted to take a look at Amazon. Amazon today hit 2,050. Bottom line, I wouldn't be short in Amazon. If you're looking at a shot, I wouldn't be shorting it. Amazon, dollar-wise, on Friday at least, it was the highest dollar-denominated shot in the marketplace, but it's only 1.1%. Tesla is one of the largest short positions when you look at the percentage of shots in the marketplace. Tesla right now is 25.66. 1 out of every 4 shares of Tesla is in a short position. And Tesla right now still has a market cap of $49 billion, and they take in, next quarter, they plan on taking in $6 billion. They got a lot of work to do. And when you look at these figures, so Tesla is saying that they will be in the profit, in the green, on the 4th quarter. Next quarter, they plan on losing 29 cents. The quarter after that, they plan on making 73. So this is where the whole turnaround is supposed to happen. And we'll see how that shakes out, because the way that Tesla's trading right now, went into lows, has volume coming into lows. We put this on a monthly basis, and this is going to go right after a high volume low. And once you get back inside the 290 area in Tesla, what you actually have is that is in the lower range. GM saying that they're having a few problems. GM is said to report 13% sales drop, and the estimated was supposed to be down 7%. So bottom line is that that's a double percentage drop in GM. GM last 3 months just went from $44 to $35. Let's see this. Yeah, it's back in a consolidation. It doesn't bode well for all car companies in general. Dow Industrials finished down 12, NASDAQ off 18, S&P's down 3.5. Come right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow finished down 12, NASDAQ off 18, S&P's down 2.5. So overnight, what are going to be watching, folks? It looks to me like this dollar does want to back off once again. That being said, bottom line is that we'll see if, in fact, we can get any juice going inside the metal market. So we're talking whether it was Tommy this morning, whether it was Jason this afternoon. Bottom line is that last time we caught a big bid in April. We caught a bid on the 24th of August. 24th of August went from 11.89 to 12.15. That 11.89 number is a big number. What that also is this. That is the high of the low that was generated on August 16th. So bottom line, we'll see where this baby is going to shake out. We get over and we take a look at the silver market. Silver also got hit out here today. Silver broke out as bottom. So this is definitely trouble inside the metals market. What silver did do, did 134,000 contracts. You broke out the last low out here, which was $14.40. If we do take a look at the silver market, we put this on a continuous contract. I believe I had the number this morning. It's $13 and something it's going after. Let me just get this for you. Yeah, $13.64. $13.64 is your swing point from December of 2015. That's where it's going after. Now, there's no doubt. You have support there, but guess what? It'll all depend on how we hit that. Will it reject lower price and, in fact, catch a bid, or does the dollar continue to want to go higher? Restoration Hardware came out with numbers after the close. Restoration had closed down $7.72, trading $151. That's trading at $142 right now. Numbers on Restoration Hardware go like this. Same-store sales were up 5%. Earnings per share was $2.49. The let's see. So what did they lose? Yeah, the bottom line is that they made their numbers, but bottom line, they're selling this baby off. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great night, safe night. We look forward to speaking right back here, 8:30 tomorrow morning. Join Jason, folks. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.